Hi folks, Lee Gettess here with the Market Sense for the week of December 13th, 2016. The charts in this presentation come from the Trade Navigator software by Gettess. And, we're looking at weekly bonds here, but let me say before we look at anything, we've got the FOMC meeting this week. They'll adjourn Wednesday afternoon, and the market's been waiting forever for them to raise rates. I think there's a 98% chance they do it at this meeting, and maybe that's a non-event. Maybe it's totally priced in, but you certainly can't trust the markets not to react to it. So, pretty difficult week to control the risk since you don't know how they might behave. And wouldn't the biggest shock be if they don't raise rates? No clue what they might do then. But bonds, kind of, sort of should have been in a bottoming process since this big bar down. They kind of don't really look like that, but I'm still thinking they might bounce up at some point. We were looking at support down here at 147.04, which they have not quite been to. 147.10 is the low. Maybe that's close enough. Best resistance is just above 150 and a half here, 150, 17, 18, somewhere in that vicinity. And I think there's a chance we could see them all the way up to 52.16 or even higher, just because they're sort of ironic in this way. I think the Fed raises interest rates, the bond market might rally. I know it doesn't make any sense, but that's the way bonds are. So I kind of think that might be the case, but we'll just have to wait and see. In stocks, stocks are making new all-time highs, and anybody who wants to sell them don't understand what new all-time highs means. That's just a good way to lose money if you want to do that. We were looking at support all the way down here in the 22-23 area. But look, 22.23 looked like it would be a good buying opportunity. 22.05 right in this area. Heck, if they go down here to 21.75, would they look bad? Absolutely not. They'd still be well above the old swing here that they broke out above. So, you just can't get negative on this. They could top out at any point, but from a probability standpoint, you simply cannot get negative on this market with this kind of strength. The next upside target here is around 22, let's call it 22.83. Again, it's a target. I'm not calling it resistance because even though they could stall there, there's absolutely no reason to sell it up there unless you have a death wish. So, if they react negatively to the news of the Fed, whatever the Fed does, 22.23 is a good area to look at for a potential buy. And again, anywhere down to 21.75, I'd still be looking to buy them. So we'll just have to keep an eye and see if we get that opportunity. Based on the last few weeks, we certainly may not. They may just blow up here. So that's what we've got for you today. I hope you can find something profitable to get yourself.